Hello everyone, thanks for tuning in. In today's video, we'll explore the best stocks for beginners and help you understand what stocks are, how the stock market works, and why investing in stocks can be a smart move. So let's dive right in. Stocks represent ownership in a company. Imagine this pizza as a company with each slice representing a stock. When you buy a stock, you're essentially purchasing a small piece of that company, known as a share. Owning shares means you hold a portion of the company, with your ownership percentage depending on how many shares you own compared to the total shares available. The price of these shares is determined by supply and demand. If more people want to buy a stock, the price goes up. If more people want to sell, the price goes down. Typically, the company's performance and value influence whether people want to buy or sell, which in turn drives the share price. The Securities and Exchange Board of India, or SEBI, oversees the market to ensure fair trading practices and protect investors. Now, let's dive into some specific stocks that could be great picks for beginners in India. Remember, this is not a direct investment recommendation, but rather an analytical overview to help you understand these options better. It's crucial to conduct your own research and consult with a financial advisor before making any investment decisions. Starting with Tata Consultancy Services, or TCS, one of the global leaders in IT services, consulting, and business solutions. TCS stands out in the IT and software services sector, offering a diverse range of services including software development, business process outsourcing, and IT consulting. With its strong global presence and leadership in digital transformation, TCS is considered a stable and attractive investment. Its clientele includes numerous Fortune 500 companies, solidifying its reputation as a reliable industry giant. Now, let's look at TCS's stock performance over the last 5 years. From 2020 to 2024, the average price experienced a steady increase year over year. 2020, the average price was 2,102. 2021, the price rose significantly to 3,054, marking a growth of about 45.3% compared to the previous year. 2022, the upward trend continued, with the price reaching 3,489, a 14.2% increase from 2021. 2023, the price further increased to 3,815, representing a 9.3% rise from 2022. 2024, the average price climbed to 4,100, and 7.5% increase from 2023. Overall, this steady growth over 5 years represents a total increase of approximately 95.16% from the starting price of 2,102 in 2020 to 4,100 in 2024. TCS boasts a market capitalization of around $12.7 trillion, or about $155 billion USD, as of the latest data. The company reported impressive revenues of $2 trillion, approximately $24 billion USD, with net profits of $400 billion, or about $5 billion USD. One of the strengths of TCS is its low debt profile, maintaining a strong balance sheet with minimal leverage, which is typical for companies in the IT services sector. Looking ahead, TCS is focused on expanding its digital transformation services, including cloud computing, AI, and IoT solutions. The company is also targeting high-growth markets in North America and Europe. The IT services sector is expected to grow further, driven by rising demand for digital solutions, automation, and cybersecurity. TCS, with its established brand and global reach, is well-positioned to capitalize on these trends. However, TCS faces several risks, including currency fluctuations, given its significant international revenue. The company also faces competition from global IT services firms and must navigate regulatory changes in key markets. To stay ahead, TCS must continuously innovate in the rapidly evolving technology landscape. Fortunately, TCS benefits from being part of the Tata Group, with a management team known for its strategic vision and operational efficiency. In recent news, TCS has been making strides with strategic partnerships to enhance its cloud services, expanding its presence in the European market, and increasing its focus on sustainability and green IT initiatives. Market sentiment around TCS remains positive, with analysts frequently highlighting the company's robust financials, strong order book, and leadership in digital services. Next up, Reliance Industries. Reliance Industries operates across a variety of sectors, including petrochemicals, refining, oil, telecommunications, and retail. This diversification makes Reliance a stable choice for investors as it's less reliant on any single market. Its presence in familiar sectors like retail and telecom also makes it easy to understand. The core activities of Reliance Industries include refining and petrochemicals, telecommunications through its subsidiary Jio, and retail through Reliance Retail. The company's major products encompass refined petroleum products, petrochemical goods, digital services via Jio, and a broad range of retail products. Reliance generates revenue from its refining and petrochemical segments, subscription and data services from Jio, and retail sales from its extensive network of stores. Take a look at Reliance's stock performance over the last 5 years. Reliance Industries has demonstrated strong growth in its stock performance, with a consistent rise in its average price each year. 2020, the average stock price was $1,464. 2021, the price increased to $2,011, reflecting a substantial growth of about 37.3% compared to the previous year. 2022, the upward momentum continued, with the average price reaching $2,350, a 16.9% increase from 2021. 2023, the stock price saw a more modest rise to $2,487, representing a growth of 5.8% from 2022. 2024, the average price further climbed to $2,734, an increase of 9.9% compared to 2023. Overall, from 2020 to 2024, Reliance Industries' stock price has surged by approximately 86.74%, rising from $164 to $2,734. Moving on to the company's financial health. As of the latest data, Reliance Industries has a market capitalization of approximately $16.5 trillion, or about $200 billion USD. For the fiscal year, the company reported revenues of $9.5 trillion, roughly $115 billion USD, with net profits amounting to $1.4 trillion, or $17 billion USD. Despite significant debt levels, Reliance's financial position remains strong, thanks to its diversified revenue streams and strategic focus on reducing leverage through asset sales and partnerships. Looking ahead, Reliance is focusing on expanding its digital services, increasing its retail footprint, and investing in green energy. Key strategies include enhancing Jio's market penetration and scaling up renewable energy projects. The sectors Reliance operates in are expected to grow, driven by increasing digital connectivity, consumer spending, and energy demands. The company is well positioned to capitalize on these trends. Of course, there are risks and challenges. These include regulatory hurdles, intense market competition, fluctuating oil prices, and economic volatility. However, the company's management, led by Mukesh Ambani, has a strong track record of driving growth and innovation, supported by a strategic vision and operational expertise. Recent news highlights include the expansion of Reliance Jio's 5G network, strategic partnerships in the retail sector, and significant investments in green energy projects. Market sentiment remains generally positive, reflecting confidence in Reliance's growth strategy and its ability to adapt to market changes. Up next is ITC Limited, one of India's most prominent and diversified conglomerates. Today, we'll delve into ITC's business model, financial health, growth potential, risks, and recent developments to give you a comprehensive overview of the company. ITC Limited operates in various sectors, including FMCG, hotels, paperboards and packaging, agribusiness, and information technology. Known for its strong brand portfolio, ITC is a leading private sector company in India. Its dominance in the FMCG sector, with well-known brands like Ashirvad, Sunfeast, and Classmate, makes ITC a stable and attractive investment option. The company generates significant revenue from its cigarette segment, followed by other FMCG products and agribusiness. Although the hotels and paperboard segments contribute to the revenue, they play a smaller role in the overall financial structure. Let's take a look at the historical stock performance of ITC Limited over the past 5 years. In 2020, the stock was priced at 189.24. By 2021, it rose to 207.78. In 2022, the stock saw further growth, reaching 241.60. In 2023, it made a significant jump to 361.21, and in 2024, it climbed even higher to 430.57. Overall, the total average increase over this period is an impressive 118.58%. As of the latest data, ITC Limited boasts a capitalization of approximately 5.2 trillioners, or about 63 billion US. The company reported revenues of 76,097 crores, with net profits of 17,255 crores. ITC maintains a strong balance sheet with minimal debt, reflecting its robust financial health and providing significant financial flexibility. Looking ahead, ITC is focusing on expanding its non-cigarette FMCG portfolio, growing its hotel business, and increasing its presence in the paperboard and agribusiness sectors. The FMCG sector in India is expected to grow significantly, and ITC, with its strong brand presence, is well positioned to capitalize on this trend. However, ITC faces certain risks, particularly in its cigarette business, which is heavily taxed and regulated. Additionally, competition in the FMCG sector, economic slowdowns, and challenges in scaling new ventures also pose risks. Despite these challenges, ITC is led by a seasoned management team with a strong track record of driving growth across its diversified business segments. In recent news, ITC has increased its focus on sustainability, expanded its FMCG portfolio with new product launches, and made strategic investments in technology and digital initiatives. The company is also exploring opportunities in the health and wellness segment. While market sentiment towards ITC remains generally positive, concerns about regulatory risks in the cigarette business continue to weigh on investor sentiment. Next, we're diving into one of India's financial giants, HDFC Limited, a name synonymous with trust and growth in the housing finance sector. HDFC Limited, or Housing Development Finance Corporation, is India's leading mortgage lender. Established in 1977, HDFC has revolutionized the housing finance sector by making home loans accessible to millions of Indians. HDFC's core business is providing housing finance to individuals. But that's not all. The company also offers loans against property, construction finance, and has diversified into banking through HDFC Bank, insurance with HDFC Life and HDFC Ergo, and asset management through HDFC Mutual Fund. The majority of its revenue comes from interest earned on housing loans, but its subsidiaries in banking, insurance, and asset management also contribute significantly. Let's take a closer look at the historical stock performance over the last 5 years. HDFC Bank's stock performance has been relatively subdued over the past 5 years, showing a mix of ups and downs. 2020, the average stock price was 1,127.27. 2021, the price rose to 512.2, showing a notable increase of about 34.1% from the previous year. 2022, the stock price slightly declined to 1,461.53 cents, a decrease of 3.3% from 2021. 2023, there was a recovery, with the price rising to 1,609.80, reflecting a 10.1% increase compared to 2022. 2024, the price dropped again to 1,544.50, marking a decrease of 4.1% from 2023. Overall, the stock's performance over these 5 years has been inconsistent, with periods of growth offset by declines. Despite this underwhelming performance, HDFC Bank's solid fundamentals, strong market position, and strategic focus on growth continue to make it a compelling long-term investment opportunity for many investors. HDFC Limited boasts a market capitalization of approximately 5.0 trillions, or about $60 billion USD. The company has consistently reported strong revenues and earnings, supported by healthy profit margins. HDFC's debt levels are well managed, ensuring a strong balance sheet and maintaining its high credit ratings. Looking ahead, HDFC is well positioned to capitalize on the growing demand for housing finance in India. The company is also expanding its digital footprint and product offerings across its various sectors. With continued urbanization, rising income levels, and supportive government policies, HDFC's future looks bright. However, no investment is without risks. HDFC faces regulatory challenges, economic slowdowns, and competition from other financial institutions. Additionally, interest rate fluctuations and market volatility are key factors to watch. In recent news, HDFC Bank is poised for a significant boost in its weightage within the MSCI Global Standard Index, following the index's August 2024 review. This increase is due to an adjustment in the foreign inclusion factor, positioning HDFC Bank to receive the highest inflows among all Indian companies featured in the index. The expected surge in investment underscores the bank's rising prominence in the global financial arena. Next up, Infosys Limited. As a global leader in next-generation digital services and consulting, Infosys has carved a niche for itself by driving digital transformation for businesses across the globe. Infosys operates predominantly in information technology and consulting services. The company offers a wide range of services, including consulting and integration services, delivering strategic IT consulting to develop tailored solutions for clients, application development and maintenance, crafting and managing bespoke software applications for organizations, digital transformation services, enabling companies to leverage digital technology for improved efficiency and customer experience, cloud and infrastructure services, managing cloud environments and IT infrastructure, business process management, offering a comprehensive suite of outsourced services aimed at optimizing business processes. When it comes to stock performance, Infosys has demonstrated robust growth over the past 5 years. Let's take a look at its historical performance. In 2020, the average price stood at 727. In 2021, it rose to 159. By 2022, it reached 1587. In 2023, the price was 1671. And in 2024, it climbed to 1873. That's a total average increase of 157% over 5 years. From a financial health perspective, Infosys is a powerhouse with a market capitalization of around 6.6 trillion, or approximately 80 billion USDs. The company reported revenues of 121,641 crores, or about 15 billion US, with net profits of 22,367 crores, or around 2.8 billion US. What sets Infosys apart is its minimal debt and a healthy balance sheet, providing significant financial flexibility. Looking ahead, Infosys is focusing on enhancing its digital capabilities, particularly in AI, cybersecurity, and cloud services. With a strong global presence and diversified service offerings, the company is well-positioned to capitalize on the growing demand for digital transformation. However, there are risks to consider. Infosys faces challenges from economic slowdowns, changes in technology, and intense competition. Regulatory changes and cybersecurity threats are also potential hurdles. Yet, Infosys's seasoned management team, known for its strategic acumen, continues to drive the company forward. In recent news, Infosys has been doubling down on enhancing its AI, machine learning, and cloud services. The company has also announced several strategic partnerships and acquisitions to bolster its capabilities. Thanks for joining me on this journey to explore the best stocks for beginners. Remember, investing in stocks can be a powerful way to grow your wealth, but it's important to do your research, understand the companies you invest in, and stay updated on market trends. See you in the next video.